Okay, here's a trade that we have just entered short. We have sold 4 contracts at 13.1075. You can see over towards the left where it says 13.1075 and the down red arrow. So this trade was actually set up some 20 minutes ago, and had the order in there and just got filled. So you can see the previous order in there that says 1309.25. The reason we were already in a short trade, and that trade was not taken. So, there's actually another video on that previous trade that you can take a look at. But what we like to do at E-mini Day Trader, of course, is have the trades set up and trigger in real time on the chart, so everyone knows exactly when the trade has set up and when it's triggered. Of course, all of our members understand the trades, their definitions. They're all rule-based, how they set up, when they set up, and as a result can actually gauge them beyond just sort of classifying them all as a trade, but can actually kind of see into the trade a little bit better and actually determine the quality of the setup and the trigger. So, and of course this helps a tremendous amount in trade management. Also, going into each day at E-mini Day Trader, we like to have a directional bias if one is available. That means either up, down, or sideways. Obviously sideways there's no directional bias. Today we did have a down directional bias going into the day. It's obviously a preference for taking the short trade. At the bottom of the chart you can see our what we call our filter. It's the band at the bottom, and you can see it's mostly red. There's been a little bit of gray. Gray is neutral, red is bearish. So obviously when we put this trade in, it was red, and just as it got filled, it turned from red to neutral. So we're just going to leave that in because that is compatible with our intraday outlook. We obviously want to go ahead and take that trade. So we're just going to see how things develop here. You can see that we have reached the first objective, just been filled at the first objective. And once that price has reached the first objective, just being 3 ticks, so when the short entry moved from a fill of 13.1075 down to 13.10 even, our stop adjusted, and the stop is the buy stop, 13.1150 right now, just 3 ticks above our entry price. The initial protective stop on the trade is 6 ticks, so we actually had the stop initially at 13.1225, and then it drops down and reduces that risk on the stop from 6 ticks down to 3 once the first objective is hit. You'll notice too that we're using the automated trade management feature in Ninja, and you'll, if you weren't able to notice, what actually ends up by happening is that the stop will adjust immediately when the price is hit on the first target. That doesn't mean to say that you have actually been filled. As you could see for a moment there, our stop was adjusted down so that we only have a 3 tick risk when we hit the first objective, although we hadn't yet been filled on the first objective at 13.10. So, and that's why the stop did not adjust when we were actually filled, because it had already adjusted and reduced our stop from 6 ticks down to 3. So what we're waiting for now is hopefully we'll get a little bit more selling in here, and the market hopefully will come down and hit that second objective, which is a 1.5. As you can see, we're looking to buy 1 contract back at 13.0925 for a 6 tick or a 1.5 gain. So worst case scenario, should the market rally right now up to and hit 13.1150, we would lose 3 ticks on 2 contracts. We've already made 3 ticks on 2 contracts, so in essence it would be a break-even trade, less the cost of commission, of course. So hopefully the market will drop here a little bit for us, and we can hit that second objective. So just going to hold on here and give it a little bit more time. It's looking pretty good. As you can see over on the left on this particular trade, We have what we call balance areas, and they're identified with a little red dash at the top and the bottom. The two lime green bars that you see over on the left side, that is a balance area, and this particular trade was actually entered right at the top of that balance area. So we like to use those balance areas because we are following the auction process and trying to actually identify the movement through the phases of the auction, and of course we examine the market profile to make some sort of assessment of that on the day-to-day basis or inter-day basis, and then of course we use our software in the same manner to make an assessment based on what is going on within the day time frame. So that's really the main purpose of these balance areas. Really can help us identify what is going on in the market. So as far as the auction cycle is concerned. So we're just going to wait and see. Hopefully we can hit our first objective here in a moment. If the market should come down another tick and hit 1309.25, you'll see the stop automatically adjust down to the entry price at 1310.75 from where it is right now at 1311.50. Okay, it's come down and hit 1309.25, and you can see that our stop has automatically adjusted even before we have been filled. We may or may not get filled on this, but our stop has adjusted because the trade had moved a point and a half in our favor. So we have now been filled. So as you can see, we only have one remaining contract, and we have the buy limit and our entry price and our buy stop right there. What I'm going to do here is cancel it, and rather than place a target objective of 4 points on the final partial, what I'm going to do instead is manually just place a buy stop right at the entry price. In other words, at a break even. Just let me get this here so I can adjust it properly. And just bring it up and put it right at our entry price. So now have a break even stop in on the final 1/4 of our position, which is the buy stop at 1310.75. So what we like to see when we're short, obviously, is a selling paint bar. And if we can identify a selling paint bar, then we will use that to determine exactly at what price and when to place our protective buy stop on the final partial position. So it's not just a basic trailing stop in that sense. It's actually a trailing stop that is based on the market's activity. So we can see here that we do have what we call a selling paint bar in place, and so we'll definitely be adjusting this. So you can see the high there of that selling paint bar is 1308.75. So I've just dragged the buy stop down to 1309.25. So and should the market move a couple of ticks above that lime selling paint bar and stop us out at 1309.25, we will at least have locked in a point and a half or 6 ticks on the final partial. Of course, when we're trading 4 contracts, and if we reach our first 2 objectives, we've made a total of a point and a half on the first 2, because that's 3 ticks times 2 is 6 ticks for a point and a half, and then also another point and a half on the third contract. As it stands right now, we're up 3 points on this trade, and should the market rally and stop us at 1309.25, we will at least made another point and a half, so we'd have a total of 4.5 points on this trade should we get stopped out on it. So hopefully it's going to continue to go down, and we can just continue to adjust our stops accordingly, hopefully with another selling paint bar. So we'll just wait and see if that actually occurs. Looks like we might get stopped here, just one tick away from it. A lot of times the markets will have these kinds of reactions. Okay, we just got stopped. So anyway, we finished that trade, made 4.5 points total on our 4 contracts, so happy about that. And as you can see, the market never really moved against us, but one tick on our entry, so good to see. So that'll be it for this live trade.